So from rockets going up to stocks which are nosediving, world stock markets plunged for a fourth consecutive day today. $4 trillion of investor wealth has been wiped off in just the last 8 days. Europe's main bourses were down around 2.5% in today's trade. Dow Jones Industrial Average fell by a further 2% just a while ago, which meant that it was 10% down from its recent peak. But it bounced back a little as the session progressed. The S&P 500 followed a similar pattern, losing 2% in the very beginning to rebound by about 0.5% overall. Investors were left with little option but to seek traditional refuge with the gold and the dollar. Benchmark government bonds, ironically one of the initial triggers for the sell-off, also gained in today's trade. Commodities remained gloomy as well, with oil and industrial metals all tumbling backwards as the year's stellar start for risk assets rapidly soured. Playtime is officially over, kids, is how one analyst described the situation. The equity market sell-off had been viewed by some as a healthy correction after a rapid run-up over the last year. In India, the BSE Sensex ended 1.6% down at 34,195. The Nifty 50 closed 1.58% lower at 10,498. So what explains this bloodbath on Dalal Street in particular and global markets in general? Investors are wary of the upcoming RBI policy review. Many feel the Reserve Bank of India could consider revising the inflation numbers after the government announced a hike in the minimum support price for Kharif crops. The changes in fiscal deficit target could also influence the decision of the Reserve Bank. The carnage on Wall Street also had a ripple effect on the Indian markets, and experts say the sell-off in the American markets was sparked by a sharp rise in American bond yields, which was triggered by the release of last week's jobs data, which showed that employers have added more jobs and wage growth is at its strongest in more than 8 years. And this sparked concerns that inflation and interest rates could go up. The rupee has also dropped to a one-month low against the dollar in recent days. Experts believe a weak rupee is also to blame for the stock market tumble. The market is still recovering from the government's decision to tax long-term gains. Investors fear that this decision alone could lead to a drop in foreign investments. And so far, foreign buyers have bought more than $2 billion worth of domestic shares. And finally, some expensive shares also saw a drop in their value today. Many feel that this was a correction in their high valuations, and this contributed to the bloodbath. Joining us is WION's correspondent Nick Harper. He's with us from New York. It's morning there, Nick, and the markets have opened down once again, only to recover a bit. What do analysts see the trend being like in the rest of the day?
Well, it's a really wild ride. We've seen about an hour and 45 minutes of trading so far. The market's starting the day about 2% lower and then recovering within the next 15 minutes, moving up into positive territory, back into negative, back into positive, and now, once again, they've turned negative. Currently around 0.2 to 0.4% lower for the three different indexes. If you look at that as a points range, we've seen nearly a 1,000 point range. So from the lowest point they've been during trading up until the highest point. That is a wildly differing point range, considering we've only been trading for about an hour and 45 minutes. There's still a long way to go before the markets close. Yes, some analysts thinking that maybe this is potentially just a small blip, or others are thinking that it could be a much needed correction, considering we've seen the stock markets increase massively during the course of the last year or so. Since Donald Trump, the US president, got elected back in November 2016, we've seen the markets go from record high. For example, the Dow Jones, it's added about 8,000 points in total. Over the course of the last two sessions, on Friday and Monday, it shaved off about 1,800 points. So there's still about a 6,000 point cushion from that Trump bump since his election. If it were to knock off another 6,000 points, we'd be back to the starting point before Donald Trump was elected. So the markets overall are still doing well, but there is this wild ride, a lot of volatility with trading once again on Wall Street this Tuesday.
And that is a trend across the world, a lot of volatility. And we've spoken to very many experts who say that a lot of factors have contributed, but there is no one specific trigger for this slide. What is the advice then for the small investor?
Well, I think that's it. Yes, there is no real one thing. It was the jobs data on Friday that perhaps unnerved investors initially, that concern that the US Federal Reserve may be more aggressive with its interest rate rises this year. It's already promised 3 rate rises, but potentially there could be more. For those small investors, maybe this may be the time to be able to get in on some deals, as we're seeing some of the stock prices dropping. We are already beginning to see some bargain hunters who are jumping on some of the big tech companies. Usually their stock, at least recently, has been very high and growing. Some people now trying to get in and get some bargain basement deals. The likes of Apple and Google's parent company Alphabet have seen some buying as a result of that. So there is an opportunity for those investors, but considering the volatility, the turbulence, the fact that the points are shifting so quickly, they will have to move fast, and there is always the possibility that markets will continue this plunge, not just during today's trading, but potentially over the days ahead as well. So it is a risky time for the markets.
Right, Nick Harper, thanks very much for bringing us the perspective there from New York. Volatility expected to continue in markets across the globe is what analysts see in the days ahead.